Good afternoon. This is Todd Horwitz coming from the floor of the CME Group in Chicago, and we're taking a look at, of course, the 30-year U.S. Treasury bonds, and under pressure once again. We've had some major inflation fears with this morning's CPI. The bonds were actually a little bit higher this morning, and then they sold off pretty good. And I think these inflation fears and everything else that's going on are starting to create some real momentum to the downside. The bear market is in full force right now in the 30-year U.S. Treasuries, and we look for that to continue. This looks like it's going to be a very steep rally. I think what you're going to see is rates are going to actually get away from the Fed, and of course they're going to go much higher than anybody thinks. I think we're looking at a 30-year that'll probably get over 4% before it's all said and done, if not higher. So what we're still looking to do is we want to be sellers of 145 to 146 in the 30 years in March right now, and of course pretty soon we'll be moving to June. But right now we're looking to be a seller of the 145 to 146 level. The market, the interest rates are definitely going higher. These inflation fears are for real. And of course, they can only stymie the dollar so long to keep the markets kind of under control. So once this starts to play out, we would expect a very precipitous drop down. Our first target here again is 140, but we look for lower price than that, but we would look for a bounce between 140 and 142. So right now we're sellers at 145 to 146, and we'll see how this plays out. That's the way I see it. This is Todd Horwitz coming from the floor of the CME Group in Chicago.